Hello, everyone. Good evening. Before I get started, if you have any question, please put forward, and then we will jump in and get started. Any question, any of you, any doubt, anything that you would want to ask me, anything? Am I audible? First, let me ask that. Am I audible to all of you? Can you please write in the comment? Yes, no? Rohina, you can just write yes. All right. Let's get started. Hello, everyone. Good evening and welcome to NorthStar. Today in this lecture, we are going to start with our first session for CPA. Which subject are we going to begin our sessions with? Of course, we are going to begin with the most complicated papers in the entire CPA syllabus. And that indeed has to be FAR, Audit, Reg, BC. Which one do you think? So yes, we are going to start with Aud or auditing. It is one of the most complicated subject in your syllabus. Now, I'm not saying complicated because I want to instill that fear in your mind. I'm telling you so that we are careful while we are studying and preparing for the subject. We should be little more focused, little more alert while going through this paper, because the paper overall may look little simpler to you, particularly while I'm teaching you, because I will take you through in-depth coverage, understanding the complex areas, the fundamentals, the concepts, and of course, the MCQ questions. So overall, it may look very simple, but because there are a lot of subjectivity involved in it, it becomes a little complex unless you have an in-depth understanding of what we are going through. Unlike other subjects where it looks more or less clear, subjectivity is pretty less. Audit, unfortunately, is not like other papers. And that is why we are taking it together. We are going deep and we are going to be very conceptual. I'm sure you are going to have a lot of fun in this paper because it's actually fun learning auditing, because we are coming up with different ways of learning this paper so that it remains exciting. Though the paper may look a little dry, I'm sure at least I will put in my best efforts to ensure that it remains exciting throughout. In case it gets a little dry, we are going to have suitable number of breaks and come back with a lot more energy, with a lot more focus, and we are going to do it together from the very beginning. Let's jump in and get started first with the syllabus. But before I get onto the syllabus, a brief introduction about myself. My name is Irfat. I'm a chartered accountant. I'm a CMA. I'm a CPA. I am CIMA UK. In addition, I hold multiple other qualifications in finance and management accounting. I've been training students for over 2 decades now, and I've taught thousands and thousands and thousands of students in my long teaching career. I specialize in finance and management accounting, but auditing is one such added love that I have explored, and that's why I'm here today with you for auditing. Let's jump in and get started with this excitement. Table of contents. What are we going to learn in auditing? Of course, the syllabus is quite big and close to 57 topics are there in auditing. That's not a joke. Remember, So many things we need to go through, and at the same time, we need to remember, recollect, apply, and a lot more. Is it going to be easy? Answer is it's not going to be easy at all, but I can assure you it's going to be challenging and exciting. And I'm sure none of you are here because you don't love challenges in life. You are here with me today to take your career to the next step, next level, because you love challenges. Otherwise, I'm sure you would have settled with something smaller or something different. You love challenges, and that's why we are here today on a weekend, spending time not with the family, but in our career building. And that makes a lot of difference. Let's jump in and take you through the entire syllabus. We have 6 sections in auditing. Section A has in total 11 topics. I'm not going to go through each of these topics today, but as and when we begin a particular section, I will take you through these topics. Each topic is important. There is some kind of connectivity between the topics, and I'm going to take you to ensure that you do not lose out on that connectivity. I'm going to build a lot of connections between the topics because auditing per se is one overall concept. And that is what we are going to do. We are going to connect a lot of things so that our journey becomes a little smoother and we are able to remember lot of things without putting, extensive amount of hard work. Section B. Again, section B has 9 topics in it, 9, a little lesser than section A. Then we have section C. What does it talk about? Risk evidence and sampling. Okay, I missed out to tell you the topic name for the first 2. The first one is audit reports, the most important topic. All right, there are 2 very important topics, and audit reports or section A is one such very important topic. Quality control, engagement acceptance, planning, and internal control is another important. Yes, it is, but not so much like audit reports. Then we have section C, risk evidence and sampling. If you have understood audit reports, you have understood how auditings are done, then here gathering risk, gathering evidence, and sample testing is the process through which we are going to gather evidence, on the basis of which we are going to base our opinion. What opinion? Audit opinion. All right, we are going to talk about it at great length as and when we progress. And it has little, bigger topic. It has 10 topics in total. Audit data analytics, it is little of, something that many of you may not have heard, particularly sampling 1, sampling 2, and audit data analytics. It's going to be little unique because it has little of analytics, little of statistics in it. So these 3 topics may look little different for you, but don't worry, we will certainly sail through this as well, even though it is a little complex area. Section D, performing further procedures, forming conclusions and communications. If you have understood the first 2-3 topics, then this topic is going to be very well connected, not going to be completely out of context or out of box for you. I'm sure we will be able to take it through a little smoothly. Particularly revenue cycle, expenditure cycle, cash cycle, these are very easy area. One reading and good to go. So it's not very challenging. I'm sure you are going to have a lot of fun in section D particularly. Then we have section E, integrated audits, attestation engagements, compliance, and government audits. Those of you who have studied auditing in your schools, no, we don't study in schools. In your colleges and in CA Inter, CA Final, yes, you are going to find a lot of relevance for the previous 4 topics that I have talked about, previous 4 sections rather that I have talked about. This section particularly is going to be little different and little new because these are something which is not covered in the Indian context. So if you have studied some auditing, you have some good knowledge, good, it is going to be valuable and useful. But section E is going to be a little different. We are going to spend good amount of time understanding this section at length. Government auditing, audit, single audit, all these are something integrated audit, all these are something that we have not studied in the Indian context. We are going to take it slow, and we are going to spend good amount of time in that topic. Section F. Section F is one of the most important section. If I am given to compare section A and section F, which one would I give more weightage? I think both requires equal respect, in my opinion. In fact, if I compare and weigh it properly, section A, if you noticed, has 11 topics, and it is important. Section F, on the other hand, has just 9 topics. So just 9 topics. Is it just? No, it is not just, but compared to 11, 9 definitely looks a little lesser, right? At least in terms of length. So is section F as important as section A? Answer is, in my opinion, section F is more important, and you are going to remember me when you are writing the exam for the first time, because you'll see a lot of questions from section F. And that's why if I'm given an option to begin your lectures with section A or section F, I think I will always be in a dilemma. But don't worry, I will ensure that your learning, your connectivity does not get impaired, whichever section I decide to begin with. Let me know in the comment section, which section do you want me to start with? It may be a sequence, it may not be in the sequence, but don't worry, I will ensure that all connectivities are established and you do not miss out on understanding the first one and using that knowledge for better understanding of the second topic. I will ensure that I build that connectivity for you. So section F is again a very, very important topic. You will find lots and lots and lots of questions in the exam from this particular section. In my opinion, section F is quite easy. It is challenging, but it is quite easy to understand. Very limited judgment is required here. Little of focus and memory is what is advised in this section. But from exam point of view, you can expect a lot of questions from section F. If you want to understand, so why section F is very important, just go back to the business around you and think for yourself. What do you see around yourself? Do you see listed companies in great numbers around you, or do you see unlisted companies, private companies, a lot more in numbers around you? Which one do you think are more in numbers? Who needs services of a CPA? In India also, if you can let me know which one do you think is going to be more in numbers. So definitely private companies are going to surpass by great numbers the listed public companies. And section A is particularly for listed companies because there is where the need for audit is felt most. But section F is primarily applicable to companies which are not listed companies, which in more technical word, we call it non-issuers. So what is issuers? In simple word, understand listed companies, companies which are listed in the stock exchange. Those are called issuers or public companies in the Indian style, what we call. Private companies or non-issuers. So this section F, becomes important because this is applicable to only and only non-issuers. All right. Is it very similar to auditing? Answer is yes, it is quite similar to auditing. But again, there are certain things that we are going to learn which you would have never learned in the Indian context. It is exciting because we are going to learn for the first time something different, something that we have not heard in the Indian context. All right. So we are going to look into that as well. That is section F. Very, very, very important topic from exam point of view. And because there's something called diminishing marginal utility. I'm sure all of you have heard of a concept called diminishing marginal utility. We are very efficient at the very beginning, then our efficiency comes down, slows down, we become a little more relaxed. And considering that, I have decided that I'm going to begin the session with section F and then go to section A, cover the two very, very important topics at the very beginning and then go on to the next one. It will give us an advantage of having high spirit, having high confidence, and knocking down two very, very important areas for exam. After that, even if you slow down, it's okay. I will keep the spirits high and ensure that I do not let you slow down at any point in time. All right. So leave that on me. I will ensure that I do the magic as always. So this particular section, section F, has in total 9 topics. I will take you through all of these topics a little while once we begin with section F today. But let me take you through the entire auditing paper, how many testlets are going to be, how the exam pattern looks like, how the question comes, what are these testlets, what is the weightage, and a lot more. So remember, auditing paper has 50% weightage on MCQs. All right. So 50% weightage is purely on MCQ based exams, which means there are going to be 2 testlets of 36 questions. All right. So there are going to be 2 testlets of 36 MCQs in total. So testlet 1 will have 36 MCQs, testlet 2 will have 36 MCQs. Now, remember, each of these MCQs are not going to be considered for your evaluation because there are going to be some pre-test questions. So what is pre-test question? Pre-test questions are basically questions which are not considered for your evaluation and for your score. These are questions that the AI CPA puts in the exam just to get a feedback of the student's performance, gather data, and understand how the student would perform if these questions are actually put out in real exam. So these are data that AI CPA gathers for improving or for increasing or adding some new questions. So no new questions are added immediately unless they come as a pre-test. In case you are chartered accountant, I'm sure all of you must have heard of something called RTPs, right? Before a question reaches your exam question paper, generally those are issued as RTP questions, revision test paper questions. And then slowly those revision test papers questions find its way in the final exam for CA Inter or CA Final. Exactly in the same way, these are some of the questions which are included in the real exam. Unfortunately, there is no way to identify which are the questions which are going to be considered for your evaluation and scoring and which are the pre-test question, which even if you go wrong, it does not make a difference at all to your final score because anyways, they are not considered for your scoring and evaluation. So, like I said, you get 50% weightage for your MCQs, you get 2 testlets. Remember, CPA exam is a little different. The first testlet is going to be normal, but based on how you have performed in the first testlet, the second testlet is going to be defined. If your performance in first testlet is really good, the second testlet automatically will become more difficult for you. But in case your first testlet has gone okay or bad, then the second testlet will not be that difficult for you. This is only for the second testlet. The first testlet is going to be uniform for everyone, but the second testlet becomes more difficult if your performance in the first testlet is really, really good. So what does that mean? Should I go easy on the first testlet so that the second testlet does not become very difficult for me? Answer is no. There is a internal analytics which gathers lot more data from you, and if the question paper is difficult, the evaluation process becomes different for you. All right, so it's not that everyone gets the same paper and same evaluation technique is used. Answer is no. It is little different, but it is something which is inside the system. It is not open for public to understand the system, but inside it, it works very, very differently, uniquely, and takes care of you, even if you are exposed to a difficult question paper. So don't worry about that at all. Put in your best efforts in the first testlet, even though the second becomes very difficult. It's okay. It's very, very much perfectly all right. So 50% on MCQs, then you go on to the next one. The first 2 testlets done. The remaining 50% weightage is the task-based simulation or TBS. What are task-based simulation? I'll take you through while we progress a little further. The total duration of the exam is 4 hours. Remember, you get in total 4 hours for writing this exam. And in addition to 4 hours, you get 15 minutes mandatory break, which means you can take these breaks without the time being considered. So even if you go on break, no problem. This is an additional 15 minutes break, unlike in CMA, wherein you do not get any mandatory breaks. Even if you go on break, your time keeps clicking. Here in CPA, you get 15-minute break, the time stops for you for 15 minutes. In case you want to take break early, you can take, but this is not a mandatory break. Your time will keep clicking. So basically, you can take break after submission of 3 testlets. Testlet 1 MCQ, testlet 2 MCQ, and the third testlet. All right. So after these 3 testlets, you can go for break. All right. Fine. If you are in the middle of a testlet, can you go for a break? Answer is no. If you are in middle of a testlet, you will not be allowed to leave your seat. You have to submit a testlet before you can go for a break, even if it is a mandatory break. So if you are in middle of testlet 2 and you want to rush out for something important, you cannot. You have to submit the testlet. So plan your day properly. Though the break can be taken at any time after submission of the testlet, it is advisable to take after submission of the third testlet, since otherwise the timer would continue to run. It is important to remember that the break cannot be taken while you are in the middle of any testlet. So you have to submit the testlet and then you need to go on for break. The auditing paper has total how many testlets? So the auditing paper has in total 8 testlets divided into 2 MCQ based and remaining total you get 1, 2, 3, 4, 5. So you get total 5 testlets, not 8 testlets. Divided into 2 MCQs and you get 5 task-based testlets. It's not 5, it is 3 task-based testlets. In case, you shall be provided with 66 MCQs in total, but only 54 MCQs will be considered for your exam. It's not 66, it is 72. I'm sorry. Anyways, let me get on to the next one. What more you need to know? I think this is enough for you to know. Please remember the pre-test questions are not considered for evaluation. Remember this. These are not considered for evaluation, but there is no mechanism available for you to understand which of the questions is a pre-test question and which are going to be considered for your evaluation. In case you have any questions, till here, in case you have any questions, you can ask me before I go on to begin with section F. 1 minute break. Each MCQ with 3 or 4 choice question. Each MCQ has 4 choices. Any other question? Keep the class very engaging. I want all of you to keep talking to me, keep asking questions, keep engaging, because that's the best way to ensure that you remain focused throughout the session. All right. So keep asking, even if you have a very unwanted question, undesired, or a very stupid question. That's okay. That's perfectly okay. I will ensure that I answer all of them. During the break, you can ask me anything. So during the break, we run an AMA wherein you can ask me anything that you want to know about. Don't go personal. Remaining everything is okay. Explain about other testlets other than MCQs. Other testlets, I will take you through because I need to show you how those testlets look like. What are the options? It looks a little different, but those are also kind of match the following, pick up the right options, fill in the blanks. It looks like that. But when we say testlets, it looks like, oh, something different, something unique. No, it's simple. Simple. It's very, very simple. Not very confusing. So don't get amazed by the word testlets. All right. Can we go on to the next one? Can we get started with section F? Let me know. Yes, no. If you want 1 more minute break, do let me know. Break. Some of you are commenting to host and panelist. Make it open. Leave it all open to everyone. All right, fine. So the first day excitement is high, and let's continue. Is it possible to type in the theoretical paper? Answer is there is no requirement to type anything in the entire CPA exam except for one paper called BEC, wherein you get one question wherein you need to type. All right. So other than that, there's no requirement of typing anything in the entire CPA exam. At the max, you will be required to type numbers: $12,500, $3,759. That's a max that you need typing. Otherwise, there's no requirement of typing anything. It's all the mouse game. So start playing with your mouse. Section F, auditing and review service engagements, interim reviews, and ethics and professional responsibilities. What is this paper? Looks so many things together, right? Looks a lot of things have been, put into together. So here we are going to learn about SSARS engagement. All right, what is SARS engagement? We will talk about it. Then we are talking about preparation engagement, compilation engagement, review engagements. What is all this? I will talk about it at length. Then we have review reports, we have interim reports, we have AICPA code of professional conduct, something like we have in the CA, chartered accountancy. Also we have professional ethics, something very similar. Here also we have AICPA code of professional conduct. We have ethical requirements under SEC and PCAOB. What are all this? We will go into each of these slowly. All right. Then we have government accountability office, and we have Department of Labor. All of it we have. All right. So let's first jump in and get started with the first one. This is SSARS. Yeah, small spelling error. My apologies. Now let's begin with SSARS engagements. What is all of these? Now, let me take you through the basics of it first. I'm sure all of you have heard about audits, right? All of you have heard about audits. So I'm not going to make it very, very technical. Slowly, I will take your knowledge to the next level, slowly. But immediately, no, I'm not going to use a lot of, technical words here. Slowly. So I'm sure all of you have heard about audits. Audits can be done for a limited company or issuer, which is a public company. In India, we call it limited company, public limited and private limited, like that. So issuer, which is basically public companies, right? And then there is a non-issuer. Who are non-issuers? Non-issuers are basically private companies or companies which are not under the SEC. Right? Who is SEC? Comparative body of SEBI. In India, we have SEBI as a regulatory body. In US, we have Securities and Exchange Commission, all right, which we call as an SEC. Similar, roles, responsibilities of regulating the stock market. Now, issuers auditing is conducted in accordance with one standard called PCAOB standards. What is PCAOB standards? Public Company Accounting and Oversight Board. All right, PCAOB. You don't have to remember anything. We are going to go into great depth about each of these concepts that I'm talking today. So remember, issuers, we are going to talk about PCAOB standards. These are like a normal auditing standards. Are they very different? Answer is they're more or less similar. There are something which are unique for listed companies, and that's why there are some standards which look little different. Otherwise, overall, I can say 75 to 85% it is very, very similar to normal auditing standard. Then non-issuers, if we are doing audits, non-issuers are covered under SAS, Statements on Auditing Standards, or SAS. In simple words, auditing standards, statement on auditing standards. All right, so these are for non-issuers. Now, do you really want to get your books of accounts audited? Is there any other way of, ensuring that the books of accounts look fair? So there are many, many other ways of doing it. If audit is mandatory on you, then yes, you have to get it audited. But in case there are other ways of getting the work done, which are much simpler, easier, and cheaper ways of compliance, then we can look at other options as well, depending upon what is mandatory under the law. So there are many other things other than audit which serves similar, not exactly same, similar purpose. In India, we don't have so much regulation. Like there is no standard wherein I need to go to a chartered accountant and say, can you help me prepare my financial statement? I don't have accounting knowledge. Can you help me prepare my financial statement? Or can you prepare my financial statement? Can you review my financial statement? If everything is okay, can you please do it? Is there any regulation around that? So much in depth is not there. But here in the US context, there are a lot more other options available, which are all covered under SSARS, Statement on Standards for Accounting and Review Services. All right, accounting and review services. Now, we are going to talk about this. So first, SSARS and then SAS. So if you want to go for audit of a non-issuer, then we are going to go to SSARS. If we are going for audit of an issuer, then we are going to look into which one? We are going to look into, anyone who wants to answer this, if you are looking into audits of issuers, we are going to look into SSARS or SAS or something else. Yes, we are going to look into PCAOB. All right, Public Company Accounting and Oversight Board. Full form, no need to remember immediately. Slowly, we will pick up. All right, you remember. Good. So, if we do not want to get audits done, for whatsoever reason, audits are not applicable for me, but get something else done to see that whatever I prepared looks okay, looks fine, there is no major mistake, because I may not have in-depth knowledge of accounting. I should be, but I may not have. I'm a small company. So in that case, I can get my services done under SSARS. Remember, all these are applicable to the CPA who's performing these services. So CPA has to comply with these standards. It is not for the company to comply with these standards. It is for the CPA to comply with these standards, because these are all applicable to CPAs. All right. So what all services are covered under SSARS? Let's begin with the first one. I don't know how to prepare financial statement. I don't know. I'm a very small sole proprietor. I don't know. But I want to get my financial statement prepared. So the first service I need is preparation service. All right. Preparation service. Fine, I'm able to prepare my financial statement, but I'm not sure if things are fine internally, if assets are properly classified, if liabilities are properly classified. I have a software, everything is looking okay, but I still want expert advice to see things are okay, things are good. So I will go to another service for compilation of the financial statement, so that all the accounts, books, statement of cash flow are all put together beautifully, and there is good interconnection. There's a good data flow. Things are looking perfectly fine. So I go for a little better service called compilation. Preparation is the first level of service. Compilation becomes the second level of service. Now, compilation has been done. Numbers are flowing properly from income statement to balance sheet, from the entire financial statement. It is flowing beautifully to statement of cash flow. Numbers are matching. All these are looking first class. But I want to see if there is anything that is incorrect, or if there is anything which has gone wrong, maybe fraud, maybe inconsistency. How do I detect that? Yes, audit is one such option. I can get the books audited. But is auditing going to be a cheaper option? Answer is no. Audit is very expensive option. So is there a middle path where I can get my problem solved? Answer is yes. There is third option that you can go for, which we call a review provision, all right, or review service, where a CPA would review the financial statement to find out if there is any material inconsistency. Is he going to audit the entire financial statement to find if there is anything really wrong? Answer is no. He's going to use two broad methods to evaluate the financial statement. And that is inquiry and analytical procedures. Basically, he's going to use analytics in the form of ratios, in the form of trend, in the form of so many statistical tools that he's going to use to understand if there is anything apparently incorrect, inconsistent in the financial statement. A simple example I can tell you: net profit percentage. Last year, net profit percentage was 10%. This year, net profit percentage is 8%, where my sales is also showing higher. Sales is also increased. My cost of goods sold has decreased. If my sales have increased, cost of goods sold has decreased, my profit percentage ideally should be more or less. Ideally, sales have increased and cost of goods sold has decreased. My profit percentage should be ideally more. So he is going to use these to understand if there is any inconsistency. And like you analyzed, if my sales have increased and my cost of goods sold has decreased, my profit percentage ideally should have been more than at least 10%. All right. So this, on the face of it, you may not notice it, but through review procedures, through analytical inquiries, these can be unearthed and understood more clearly. Once these are noticed, the accountant, we don't call them auditor, because you call them auditor only if they are engaged to provide auditing services. Since they are not providing auditing services, we don't refer to them as auditors. We call them accountants. They are external accountants or advisors for understanding purpose, if you may call. So these accountants are going to analyze, oh, last year it was 10%, this year it is 8%, but my sales have increased, my cost of goods sold have decreased comparatively. This is not possible. Let me go inside, find out, let me talk to people, let me talk to the management of the company, let me talk to some of the decision makers in the company, let me talk to accountant to see if there is something wrong. So he's going to use inquiries and analytical procedures only at the review stage. Now, how does it become different than auditing? Remember, the major pulse in auditing is assurance, creating that reliability factor, that there seems to be, everything seems to be, good and fine. I'm not using technical words at the very beginning, true, fair, all that I'm not using. I'll use normal things, normal language that we understand today. Slowly, I'll get a little technical. So auditing is about creating that trust factor, a very high level of trust factor. Preparation, compilation, review, that it's not that high level of trust factor at all. In fact, at preparation and compilation, there's no trust at all. At review, yes, there is some kind of an assurance created, which we technically called negative assurance. So what is negative assurance? Don't worry, we are going to talk about it at length. I hope the basics are clear, how these are different. then auditing. I hope all of you are clear. Can I have a yes or no before I proceed to little more depth? Is it exciting? Boring? Learning auditing, is it exciting to begin with? Is it dry and boring? What do you think? So it's too premature to judge it. It is too premature to judge it, because you never know when things will turn around, and when I will start getting, oh my God, so many things do I have to remember? Really? No. I will ensure that it does not become so boring for you. All right. So, fine. The first thing, under SSARS, what is the full form? You need to remember the full form. All right. You need to remember the full form. SSARS, Statement on Standards for Accounting and Review Services. All right. Don't worry. Slowly we will talk about it so many times that that you will certainly remember. So the first service, which is a non-audit service, the basic, fundamental, cheapest service, all right, most affordable service that we can get from a CPA is preparation service. What is preparation? Understand the objective. I will highlight the keyword which you have to focus a lot. Remember, because those keywords will be picked and used in questions. You cannot be confused that moment, right? So what is the objective of preparation? So objective is just to prepare the financial statement. Now understand, when we are in India, we just talk only and only from Indians' perspective. But in the US context, it is not like that. There is a lot more countries involved in transactions with the US than with India today. So they have to, their entire auditing picture, their entire accounting picture looks little different. So you will find a lot more statement which talks about factors considering other countries' auditing as well, other countries' rules, regulations as well. So in India, when we do accounting, we follow what? We follow Ind AS, right? We follow Ind AS. This is what we follow, or what we call, extended version of IFRS. That's all we follow. But in the US, you can follow, if nothing is there, of course, you follow GAAP. All right, GAAP, when we say GAAP, it by default means US GAAP, US generally accepted accounting principles. When we do auditing, we follow GAS, all right, generally accepted auditing standards, all right, US GAAP and US GAS. There's only one alphabet difference, and that is why there is a lot of times when we will read GAAP as GAS and GAS as GAAP and do a lot of mistakes in MCQs. And examiner knows people due to oversight, we miss out on these two alphabets and do mistakes. So be very careful when we are reading GAAP, when we are reading GAS. Be very, very careful in exam. Okay, fine. So books of accounts are maintained as per GAAP. Auditing is done as per GAS. But there will be many situations where we can maintain books of accounts not in accordance with GAAP, but in accordance with so many other basis of accounting. Like in India, we can maintain books of accounts as per mercantile system of accounting, as per cash system of accounting. Is there anything called tax system of accounting? No, we don't have tax system of accounting, contractual system of accounting. We don't have those systems. But in the US context, those are very much there and acceptable and practiced as well. So GAAP you can follow. You may follow IFRS also. Depends upon which is your parent company. You may also follow cash system of accounting. You may also follow so many contractual system of accounting. There are so many. You may follow tax basis. You may follow so many. So what we call it, when we are not aware which basis of accounting, we say specified. Specified. Now answer my question at the very beginning. I want to ask a lot of questions. Please ensure that you participate in all those questions, because that will create a differential whether you are understanding or not. And I want that data for my understanding. All right. So ensure that you participate. Now answer my question. Whose decision it should be to follow what? Should it be decided by the accountant or the auditor, or should it be decided by the management of the company? Who should be decided? We are not saying company. We are saying management or the accountant. Who's going to decide that I want to follow IFRS, I want to follow GAAP, I want to keep it as tax basis or cash basis? Who should be taking this decision always throughout the entire auditing? Answer is, it is always going to be management's decision. All right, it is always going to be management decision. I am not going to choose this at all, because I'm not the decision maker for the company. I'm not an executive of the company. All right, so this is always going to be management. Remember this. So which one? Specified financial reporting framework. Specified financial reporting framework means, is it going to be GAAP? Is it going to be IFRS? Is it going to be cash basis? Is it going to be tax basis? Which basis? I don't know. The management will decide, and I will accordingly prepare whatever the management has decided. CPA does not perform any audit or review procedures. All right, in preparation, we are not going to perform any audit, any review procedures. A preparation provides no assurance. What is assurance? That overall everything looks clean. Overall everything looks fine. That is what we call assurance. More of it I will talk about at length a little later. So it provides no assurance that things are perfectly fine. No, I'm not going to give any such word of, in writing that everything is fine, because I've not audited, I've not verified, I've not tested, I've not done sampling, I've not done all that. How can I say everything is fine? You gave me the details. Imagine you are the management, you gave me all the details. I just prepared and converted into financial statement. You told salary is 100,000, I wrote 100,000. You said wages is another 50,000, I wrote 50,000. Did I check your books? Answer is no. How can I provide assurance? I can't provide assurance. Itna paisa mein itna hi milega. It's like that. You are paying me much lesser for this service, I will do much lesser activity for you. All right, so no assurance. Non-attest service. What is non-attest service? I'm not going to provide you any report. I'm not going to provide you any report of what I have done. All right, that is called non-attest service. If I provide you any kind of a report, then it becomes an attestation service. Fine, and does not require CPA to be independent. Now, this summarizes the entire preparation. Couple of important words. Let me tell you. First one, who's going to decide which framework? Management is going to decide. Am I going to provide any assurance? Answer is no assurance at all. Do I need to be independent of the company? Answer is no. Independence is not required. Is it an attestation service or a non-attestation service? So preparation is a non-attestation service. I want you to remember these points from preparation. Done? Quickly, have you recollected with yourself? Very quickly once again. Non-attestation, no independence required. Financial reporting framework, the company has to decide. That is common in everywhere. So you don't have to remember uniquely for preparation. Preparation, no audit, no review has been done. Compilation, little better. You have more money to pay me more. I will do better service. I'll provide you better service. And then it becomes compilation. Objective. What is the objective? Is to present in the form the financial statement information. That is representation of management. Representation of management means, if I was not there, whatever you have prepared, I have also done the same thing. So I am not telling that everything is fine. I have not verified the numbers. I have not checked anything. I have just presented it properly in a very organized fashion. That's all I have done. More than that, I am not telling anything. Whatever I have mentioned, is it my representation that everything is fine? No. It is your representation. So don't blame me tomorrow if something goes wrong with anything. No, don't blame me. I have not done any verification. All right. Now, CPA does not perform any audit or review procedures here also. If not independent, remember, for preparation, I don't need to be independent at all, because I'm not using my mind. Whatever is the data, I'm just arranging the data, giving you the balance sheet. Compilation, I am doing a lot more things, analyzing, seeing the flows are fine, everything is good. Here, do I need to be independent? Answer is no. I don't need to be independent here. But in case I am not independent, I should mention in the report that I am not independent. Remember this word. So question arises, is mention about independence implicitly declared or explicitly declared? What do you think? Is it implicit in the report or is it explicit in the report? So remember, independence is implicit. Independence is implicit in the report. Means, understand, if I am independent, I don't need to mention at all. Means if nothing is mentioned, what do you assume? You assume I am not independent. Is it? No. You assume I am independent. But in case I am not independent, that fact needs to be mentioned explicitly in the report. All right. So again, I will repeat, if I am independent, don't mention anything. If you are not independent, mention it explicitly that you are not independent. All right. Mention it explicitly that you are not independent. Now, this question has come many times in the exam. Is independence to be mentioned implicitly or explicitly? Answer is independence need not be mentioned at all. Non-independence has to be mentioned explicitly. Fine. Good. Next comes review report. Yes, it's like a caution to the user. It's like a caution to the user. Hey, look at me. I am not independent. I am not independent. Now the question arises, do I need to give the reasons? Why am I not independent? What do you think? Do I need to give reasons? Why am I not independent to the user? Oh, you know, this business owner is my relative's father, son, brother, mother. Do I need to give all the details? Why am I not independent? Answer is no, it is not necessary at all to give reasons. But in case you wish to give reasons why you are not independent, you have to give all the list of reasons. You can't be selective in that. So remember, it is not required, but in case you wish to give, you cannot be selective in giving reasons. You have to give all the reasons. Remember this point. So not required, but in case you want to give all the reasons for not being independent. Comfortable? Question is, where do I need to mention that I am not independent? In the compilation report. Sir, how does compilation report look like? Wait a minute. I'll take you through the entire report. In fact, I've drafted the report, beautifully edited the entire format so that learning and retention becomes very easy. All right, let's go on to the third one, review. What is review? Here we are going to give negative assurance. What is negative assurance? First, understand what is assurance. Assurance is, I am mentioning that everything looks fair. Everything looks fair, everything looks okay to me. Will I ever say everything looks amazing? There is no mistake at all? Answer is no. I'm never going to say everything is looking amazing. There's no mistake at all. Because have I checked 100% data? Answer is no. Auditing involves sample testing. So I can never say everything is perfect. No, because I've never checked everything. So I will say everything looks fair. Means nothing came to my attention which is not correct. Or nothing came to my attention that was very significant, important, and it was not correct. That's what we call it by the word assurance. We are providing some kind of an assurance, positive assurance, where I'm saying everything looks fair. What is negative assurance? I am telling nothing is not unfair. Confusing? Okay, let me tell you. There's something called positive sentence. There's something called negative sentence. You are good. This is a positive sentence. You are not bad. You are not bad. Which means it is a negative way of telling things. So exactly the same way here, positive assurance where I say you are good. Negative assurance where I say you are not bad. That is what is the difference. Remember, audit provides positive assurance, but review provides negative assurance, where it does not say you are good, it says you are not bad. Which means, in technical word, nothing came to my attention which requires modification. This is what the reviewer says in the report. Nothing came to my attention which requires modification. Basically, he is not telling that everything is fine. He said nothing, I did not notice anything. That's what he's trying to say. All right. So that is what we call negative assurance. Now, sometimes you may be hired to provide multiple services, right? So in case, is compilation an attest engagement as well? Answer is compilation is an attest engagement. Yes, because we have to provide compilation report. Wherever we provide report, it becomes an attest engagement. All right. If there is no report at all, we will not call it an attestation engagements. So in compilation, report is mandatory. We need to provide the report. Then in case we are hired to provide multiple services, we are hired to provide compilation and we are also hired to provide review services. In that case, what are we going to do? So whenever, remember exam question, very important exam question, when more than one services are performed, such as compilation and audit, two services I am performing, the accountant generally should issue the report for the highest level of services. So in case I'm providing two services, I need to issue report for compilation also and for audit also. Then I'm not going to issue compilation report. I'm going to issue audit report only. I'm not going to provide you compilation report. All right. So highest level of service. For example, compilation and review. Then which report am I going to issue? I will issue only one report. Which report? Compilation and review. Which one? You have to tell me. So I'll provide you a report for review. All right. The highest level. Very good. Next comes professional standards. Statement on standards for accounting and review services, or what we call it SSARS. The Accounting and Review Services Committee, you need to remember the name, Accounting and Review Services Committee. Under which body this committee is formed? Under the AICPA. Is the authoritative body designated to issue pronouncements in connection with what? Like I told you, SSARS is applicable for audit or for other than audit. Answer is it is applicable for other than audit. All the services other than audited. Not all, but whatever we are going to cover here. So it is applicable to unaudited financial statement. Of whom? Of non-issuers. Logically, for issuers, unaudited services, no, audit has to be there for issuers. There cannot be unaudited services. It has to be audited, mandatory, right? Can you imagine a listed company listed in Bombay Stock Exchange and says, I don't need to get audit done? No, that is not possible. So it has to be unaudited, and it has to be, if it is unaudited, it has to be for non-issuers only. The pronouncement issued are called statements on standards for accounting and review services, or what we call it SSARS. You need to remember, because there will be so many things, SSARS, SAS, PCOB, then there will be so many other things. You will get confused. Which one is what? Oh my God, how do I remember? So slowly, one thing I am telling, slowly you will start picking up. Remember, the accountant should exercise professional judgment in applying SSARS. But in case I'm doing something and SSARS says do it like this, but if I do like that, it's changing the meaning. It's changing what I intend to actually provide. What I intend to do is just changing the meaning, because situation is different. There's different complexity. There is something unique situation. Then in that case, what do I do? So it says you first of all always have to apply judgment. But in some case, if things would change, if you apply SSARS strictly, then in that case it allows you the flexibility to depart from the application of SSARS. But in that case, you have to document and record. You have to document and record the departure from SSARS. All right. Next one, applicability of SSARS. The accountant who is engaged to prepare, compile, review, because for all the three, SSARS is applicable. Prepare, compile, or review unaudited financial statement of a non-issuer should comply with SSARS. SSARS provides standards with respect to what? We already know. It provides for preparation, compilation, and reviews. SSARS also apply to engagements to prepare, compile, review specified elements, accounts, or items of a non-issuer's financial statement. So remember, SSARS not just apply to Okay, preparation, compilation, and review. Okay, fine. I understood. It applies to that. But what about one element? I want you to check my fixed assets. All right, I want to check one element of the financial statement, like fixed assets. I want you to check my common stock. All right, my common stock. I want you to check my investment, or I want you to check only my income statement. All right, review my income statement, or prepare my income statement, or compile my only income statement. Then what? Then also SSARS standards apply very much to that services also. All right, so specified elements also it applies, to accounts also it applies, and to items, any item, any particular item also it applies. All right, now it also applies to prepare or compile pro forma financial information. So it also applies to prepare or compile pro forma. What is pro forma financial statement? We will learn about it in detail. So for now, remember, it applies to preparation. Yes, it applies to preparation, compilation, review, and it also applies to preparation, compilation, review. Standards also apply to which one? To any element of the financial statement, any part of the financial statement, or any one statement, or it also applies to pro forma financial statement. All right, so all that you have to remember. All right, let's go on to the next one. SSARS do not apply. SSARS do not apply to other accounting services. Like, for example, if you ask me, can you please help me pass this one journal entry? I'm not able to understand. Can you help me pass just 2 more journal entries for me? No. So just for passing 2 more journal entries, SSARS does not apply. But if you ask me, almost 90% of the journal entry you are asking me to pass, then it will apply. So again, it calls for judgment. Very basic, entries, no, it is not applicable. But lot more if I'm doing, then it is applicable. It is not applicable to consulting services. It is not applicable to preparing a few adjusting or correcting entries. It is not applicable to any kind of tax returns that we are preparing, or rendering any kind of manual or automated bookkeeping. Manual or automated bookkeeping, it is not applicable. Data processing services, it is not applicable. Processing financial data for clients of other accounting firms, it is not applicable. This is important. I want you to remember, particularly the first one and third one and fourth one. These 3 are very, very important. It is not applicable. If the accountant prepares many adjusting, correcting entries, this could be considered a preparation of financial statement. And SSARS would apply. The accountant must exercise professional judgment in this determination. Now you ask me, processing financial data for clients of other accounting firms. Generally, why I said these are important, because if I say all the 5 are important, then you are going to lose focus. If I say these are important, 3 out of 5, 4 or 5, if I say 3 is important, then at least you are going to focus. Why I said these 3 are important? Because generally you find a lot of questions around this. That does not mean that the 4th I'm not going to study at all. You have to study everything. What is important means these are little more to be stressed. All right, next one. Review of interim financial statement. What is interim financial statement? We generally prepare financial statement for a particular period, ideally a year, 12 months. But we can also prepare it for 3 months. We can also prepare it for 6 months. All those are called interim financial statement, which are not for a full solid financial year. Example, quarterly financial statement, which are called interim financial statement. So reviews of interim financial statement, SRS, is it applicable? Now answer my question. When I was doing preparation and compilation, or compilation and audit, all right, compilation and audit. So we had to issue reports based on which one? Compilation or audit? Which one? Compilation or audit? So we had to issue based on audit. Okay, makes sense. Makes sense, because whichever is superior, you get covered under that, because that will hold you more strictly, more tightly, because that will have more strict regulation. Agreed? Now, answer my question. SSARS or SAS, Statement on Auditing Standards. Which one will have more stringent regulation? SSARS or SAS? So naturally looks like SAS will have more stringent regulation. So it says if you are doing reviews of interim financial statement, SSARS is applicable. But if your financial statement is already coming under SAS, if your financial statement is already coming under SAS, then your review of interim will not come under this, which means that will also come under SAS only, because you should have better control over you, right? There's a listing of your stock. A lot more controls are required for you. So it says if you are getting your interim financial statement, all right, so it says whose financial statements are audited, whose financial statements are audited, all right, even if you are a non-issuer, it's okay. If it is audited, it is coming under SAS. If it is issuer, then it will come under PCAOB. Since it is non-issuer, that is why it is coming under SAS. So in that case, statement on auditing standards will apply to such engagement. SSARS will not apply, because this is a superior standards, right, compared to the hierarchy. Next one, elements of SSARS engagements. You want me to continue on the first day, or you want me to? So first day, let's relax, go slow, and then we will continue from here in the next class. What do you say? Answer is we are going to continue with 2 minutes break. All right, we are going to continue with 2 minutes break. All right, we are back. I'm so excited that auditing, I think you might say, is not boring like my CA classes. Thanks much, sir. Really, we have just got started. Don't judge so early. No judging so early. You never know when things will change. All right. Now, let's go a little faster because there's nothing much to be understood here. Elements of SSARS engagements. 3 preparation, compilation, and review engagements include the following elements. What are they? First one, 3-party relationship. All right. So there's one, the management, there's one, the accountant, and there are intended users of the financial statement. Now, you tell me, financial statement, which standard should we follow? Should we go with IFRS? Should we go with US GAAP? Should we go with which one? Who should decide this? Management or accountant? Management has to decide this. Accuracy of the books of account. Who needs to decide this? Accuracy of the books that is provided to the accountant. Who needs to assure that? Again, the management has to assure that. Very good. So management is the responsible party. All right. Accountant is never going to get into the shoes of the management and do things for them. No, they're not going to do. And then accountant and then intended users who are going to use these financial statements. Now tell me, who are going to use these financial statements? Should accountant have control over it? Should accountant decide that? Or accountant is like, I don't care. I don't know. I'm not interested. What do you think? Should accountant control that, or it's not accountant job? So I'm sure all of you are thinking the right thing, right? So it is not an accountant's job to control the intended users of the financial statement. So what is the management going to do? So these are the responsibilities of the management, and these responsibilities will go for anything and everything that we are going to learn in auditing. All right, there can be more responsibilities, there can be little different additional responsibilities, but overall responsibilities are very, very similar. First one, identification of what? Financial reporting framework. Means, is it going to be US GAAP? Is it going to be tax basis? Is it going to be IFRS? That is management's job. I am not going to do this. Next one, preparation and fair presentation of the financial statement. Even if you hire me for audit, I'm not going to prepare your financial statement. I'm not going to fairly present your financial statement. I'm not going to do. You have to do it. All right. So preparation and fair presentation of the financial statement, that is again a management's job. Design, implementation, maintenance of internal control, management is going to take care. Preventing and detecting fraud, management is going to take care of all this. Compliance with laws and regulation, management job, not my job. Accuracy and completeness of the records, documents, and explanations. This is again management job. This is more specifically applicable to preparation service. All right. Here I am talking about preparation. Next one I will talk about in compilation as well. So accuracy and completeness of the financial statement, I don't care at all. This is not my job at all. It is management job. I'm not going to see anything if things are okay. All right. Under engagement under SSARS should not be accepted. Very, very important. Exam questions. It should not be accepted when the management is unwilling to accept these responsibilities. And the question clearly, the line clearly says engagement under SSARS, which means, is it only applicable to preparation, or is it applicable to compilation, or is it applicable to reviews, or all of the above? To which one do you think it is applicable? If management is unwilling to accept these responsibilities. So this is applicable to all of the three. So in case management does not give you in writing, these are all my responsibility, you are not going to accept. In case you have already accepted, and then what? Then you are going to withdraw. All right, you are going to withdraw and you are not going to do it. All right, next one. One very, very important point you have to remember. See, the job of a CPA, don't you think the entire job revolves around one very important concept called trust? Answer is yes. That's very important, fundamental, fundamental point under which the CPA should work. Similarly, when CPA is looking into the financial statement, books of accounts, one very important factor they consider about management is its integrity. At any point in time, if the management believes that if the accountant or the auditor believes that the management does not have integrity, they would immediately withdraw from the engagement, be it audit, be it compilation, be it review, be it preparation, anything. If I understand the management lacks integrity, for example, in preparation, I'm under no obligation to see if things are in order, verify accuracy, verify completeness. I have no responsibility to check, but I doubt the management's integrity. And I have reasons to believe that whatever numbers they have given, though I'm not supposed to check, I know these are all fake numbers. I don't have a responsibility to check, but I know these are fake numbers because I'm questioning integrity of the management. What do you think? What should I do? Should I still prepare and say, anyways, I was not responsible? Or I should withdraw? What do you think? So remember, at any point in time, integrity is a very, very important issue. I must withdraw, even if it is not my job to check accuracy and completeness, because I have doubts about integrity. I'm not going to be associated with such company which lacks integrity. All right, this is a standard answer. Everywhere you have to apply this answer. Wherever you see there is a question of integrity, boom, withdraw. All right, remember this point in entire auditing paper. Next one, accountant in practice of a public accounting. The accountant should possess knowledge of accounting principles. But suppose there is a unique thing, I don't have knowledge. I don't have knowledge. Or example, listed company. I have never audited a listed company. Now, listed company with Lakshmi is walking to my office to get the auditing done. Should I decline them? No, I don't have knowledge of auditing listed company. I will not take it up. Should I do that? Remember, Lakshmi is coming. No, I will not do that. So I will accept the audit, but to ensure that I do audit properly, I should obtain that knowledge before I start the auditing process. All right. So in case I don't have any knowledge or experience exclusive to that area, that does not mean I'm going to reject the audit. I'm going to accept the audit and acquire those necessary skills and knowledge by doing research, by doing more extensive reading. All right. Fine. Good. So it's not that I should have it's a prerequisite to possess those knowledge. No, it's not a prerequisite at all. So possess the knowledge of accounting principles, practice in the industry in which it operates. Not accept engagement if preliminary understanding indicates ethical requirement regarding quality control cannot be satisfied. So I have to maintain certain quality control, but I know I'm accepting this audit, but my ethical requirements of quality control will not be satisfied. Some ethical conflict is there. Then I should not accept the audit because there is an ethical conflict of interest. For whatsoever reason, they may be related party, there may be some other relationship. For whatsoever reason, it can be conflict. I will not accept, particularly if it is an ethical requirement. We will go to quality control later when we will learn about entire standards on quality control. Comply with relevant ethical requirements, including AICPA Code of Professional Conduct and others. Exercise professional judgment in accordance with SSARS. These are all the responsibility of the accountant, very uniform across every every services that the accountant or the auditor perform. These requirements are very, very uniform. So you don't need to memorize it every time. Once you have understood it, it will apply almost every time that the CPA performs a service. Intended users. Remember, who are going to be intended users? That's not my job. Who am I? I'm the CPA. That's not my job. That management has to decide. right? The intended users are persons or the class of persons who understands the limitation of the engagement. And the financial statement. Management and intended users may be the same. I perform the service for you. You are the user of your financial statement. Or maybe somebody else, some investor wants to invest money in you. They want your financial statement. For that, you got it reviewed. They will also become a user of the financial statement. Whosoever be, I have no control. So same and the same entity or different entity, the accountant has no responsibility to identify the intended users. Remember this, the accountant has no job. You give it to anybody, I don't care. Establish an understanding with the client. This is very simple. Before we start any services, whether it's preparation, whether it's compilation, whether it is review, or whether it is audit, you have to get things agreed in writing. We call it engagement letter. So remember, engagement letter is very, very important. All SSARS engagement, all PCAOB audit, all SAS audit, everything has to begin with engagement letter. If engagement letter is not there, you have not complied with the requirement of PCAOB, you have not complied with the requirement of SAS, you have not complied with the requirement of SSARS. So engagement letter must. Compilation or reviews conducted in accordance with SSARS, another set of standards. Means there are two sets of standards. One is SSARS, one is another country's set of standards, like India. Then what? So when the accountant performs a compilation or review in accordance with SSARS and another set of standards. So two sets of standards, one is US, one is some other country's standards. Both you have adopted, used, because that report is going to be used in US also, is going to be used in that other country also. So the accountant's compilation of review report should identify the other set of standards as well. For example, when you are preparing a report, you have done a compilation. How will I know whether you followed the rules and which rule did you follow? So you have to mention specifically that I have done compilation in accordance with the rules or standards prescribed by the SSARS and refer to the country, United States. Similarly, there is another country's Japanese rules are there. Then you have to also mention that this standard applicable or in Japan. That also you need to mention. Identify both the countries and both the frameworks. Financial statement prepared in accordance with financial reporting framework other than GAAP or IFRS, such as special purpose framework or framework generally accepted in another country, such as Ind AS in India. Can we prepare? Answer is yes. It can be prepared. It can be audited. All that is possible. But do those frameworks need to be identified? Imagine you are reading a financial statement. You don't know whether it is prepared as per GAAP or as per IFRS or as per some other Ind AS or as per something else. You'll be like, financial statement looks fine, but I don't know what is the basis, what is the framework. So framework has to be always identified in every financial statement. What are special purpose framework? And in case you use, how are the reports going to be different? Now, little boring area, don't worry. I will just take it, run it through. You can also do it at your end. There's nothing here much to be explained. Special purpose framework, financial statement prepared in accordance with special purpose framework are not considered appropriate in form unless, so any framework other than the SSARS or other than GAAP, other than IFRS, they are not considered appropriate unless you have done the following things. What? First one, a description. A description has to be there of the special purpose framework. One brief description. What is this framework? Anybody who does not know about it, he should read the description and understand. It's like going for dinner and reading a description. This is fluffy rice, soaked in water and baked in steam and all that, and such fancy, well articulated words. And you're like, this looks very creamy. And then you order, and what comes? Idli comes. All right. And finally idli comes. Yeah. So it's like that. So description is important. Description of the special framework, including summary of significant accounting policies, description and how are they different from GAAP? All right, you have to give a description and how are they different from GAAP. This one you have to mention. Next is disclosures similar to those required by GAAP if financial statement contains items that are similar to those included in the financial statement included. I want you to read it. This is boring, but I want you to read it. There should be description and there should be disclosure. As you do in GAAP, you should have those disclosures there as well. Financial statement reporting framework generally accepted in another country. Suppose I am preparing as per Ind AS. All right, Ind AS is what is the financial reporting framework that I am following. And I went to a US guy and said, why don't you prepare this financial statement? Why don't you compile it? Why don't you review my financial statement, which is prepared as per Ind AS? Because I have a need for it in India also. All right. So when performing a compilation or review of the financial statement, not preparation, compilation or review, because there is where we need to give a report. So when performing a compilation or review of the financial statement prepared in accordance with financial reporting framework generally accepted in another country, like India, the accountant should obtain an understanding of such framework. Otherwise, without knowing what is Ind AS, how is it going to see if things are okay? So first, he needs to understand such framework and appropriate reporting requirement depending upon the distribution of the report. Only one thing is important, that before doing it, he should obtain an understanding. Very, very simple. Now, here it becomes important. These two paragraphs are very important from your exam. All right, very, very important for your exam. Now, you are asking me to do compilation, issue a report. You are asking me to do review, issue a report. But you are going to distribute outside United States. Whatever report I am giving you, whatever compilation or review I have done, these are going to be used only and only outside US. Or this can be distributed in US as well, or only in US. Then what? So if it is outside US, it's okay. If you follow mine, okay. If you don't follow mine, okay. But if it is in US, you have to follow mine. Otherwise, go to Pakistan. Right? So that's how it is. So if the accountant is issuing the accountant's compilation or review report and financial statement are intended for use only outside the US, the accountant should use either of the following, one of the two. A report in accordance with SSARS, because US says, if you want to use outside, can you please use mine only? Still use mine. They are little rigid. They know that it is going to go outside, but still they want to show their superiority. That, okay, fine, you are going to use outside, still use mine only, no problem. But again, they cannot be so rigid. So they've given an option, you can use mine. But in case you are not okay with that, no problem. Go ahead, do other way if you are not so comfortable. But first priority is me, because I think I'm superior. That's how the attitude here also is. A report in accordance with SSARS that includes a statement that refers to the note. This is very important. That refers to the note. In the report only, I'm not going to mention entire detail. Report has to be very crisp. Unnecessary, unwanted, lengthy detail we are not going to put. Always keep this in mind. You are never going to confuse. Reports are a standard format. It can have only limited description. It cannot have infinite 5 pages report. No, it will lose the value. So whenever I have to give reference or explain something important in the report, I don't write in the report itself. I give reference to that information in the report, which is mentioned at length in the notes. All right. Otherwise, report will become unnecessarily very long and it will lose its importance. Remember this. Whenever you get confused, not remembering, it will have a reference to the notes. Blindly give this, most likely it will be a right answer. All right, fine. So a report in accordance with SSARS that includes a statement that refers to the note of the financial statement that describe the basis of presentation. including identification of the country. Country is always important. Whenever you write SSARS, it is incomplete unless you identify United States. If you write Indias, it is incomplete unless you identify India. Otherwise, it does not make sense. I cannot keep guessing, oh, Indias must be which country? SSARS must be which country? I can't guess. It should be clearly mentioned which framework, which country. All right. Accounting principles, a report, or it is or a report in accordance with another set of compilation or review. So if you are not liking my way, okay, fine, no problem. So a report in accordance with another set, whichever country you are going, in accordance with that you prepare. But if it is in United States, then you don't have an option. You have to prepare report in accordance with SSARS. All right, in accordance with SSARS. It should be in accordance with this. There's no option that you can refer to a note, you can describe that, you can use another set of, no, all that option is there, not there. You have to be in accordance with SSARS. Financial statements or financial information. Is there a difference between financial statement and financial information? Answer is yes. Financial statement is a complete set. Income statement, balance sheet, statement of cash flow, notes to account, disclosures, all these together are financial statement. Then what is financial information? Financial information can be just one particular element of the financial statement, like income statement. So whatever income statement says, standalone, we don't call it financial statement, we call it financial information. All right, one specific part of the financial statement. So financial reporting framework determines what constitutes. So based on IFRS, based on US GAAP, we understand what do you mean by financial statement? What all should be there to be called financial statement? That is defined. All these are very basic. I think I can ignore. Let me focus on important area. And I will always do that. I will always focus on important area rather than reading the entire thing. Otherwise, it becomes boring. I'm sure little excitement would have come down the moment I looked into the little boring areas. Didn't it come down? Be honest. Let's be honest. Little excitement came down. Like, no, audit is not so interesting. It can be a little boring as well. I'm sure. Any of you? Yes? Yes, because every area is not very exciting. And that is why what I will always do is I'll do the complex areas. I'll do the complex areas which are very complicated, so that if I start doing every area, your focus will reduce. Boredom will start and you may start hating the subject. No, I will touch upon all complex areas, and that's how I am going to take up auditing. Because easier area, even if you sit down and read it, you are going to understand perfectly. That's my assurance. And in case you don't understand, I'm there. You can always come back, ask me a million questions. I'll answer them. All right. So let me not get into line by line. Let me take it broad and conceptual. Reading line by line becomes boring sometimes. All right. 1 minute break, and then we'll jump in, and then we'll wrap it up. In the meantime, during the break, you can ask me any questions, ask me anything. Okay, can we have a little introduction? 2 students, 2 of you can introduce yourself. Hello guys, just 2 of you, introduction. Yes, there are. No one wants to introduce yourself. Come on, you should be so energetic, excited to introduce yourself. Yes, yes, yes. I am Anubhav. नाम तो सुना होगा. या नाम तो सुना है. Don't tell me the name. Tell me more so that everyone else gets to know about you. In auditing, is there any theory we need to write? All MCQs? Answer is no. There is nothing that you need to write ever. Nothing that you need to write ever. Let's begin with Sandhya. Yes, Sandhya, you can introduce yourself. All right, fine. In the meantime, okay, yeah, we had one introduction. Okay, hi all. I am Ravi Kumar, CMA passed out from NSA, belong to Chennai, working at Bangalore. And hi, I'm Jay Prakash, basically from Odisha. Just did my Indian CMA and working as a hedge fund accountant. Now start a plan for CPA. I think it's good. Thank you. I have completed my graduation working in a CPA firm. Okay, in India. Okay, good. All right, fine. Let's go on to the next one, subsequent events and subsequently discovered facts. Now, first understand what is subsequent events. There are two types of subsequent events. Similar concept is also there in the Indian GAAP as well. So there is something called subsequent events. All right. Now, subsequent events can be of two types. One that requires adjustment, or what we call adjusting events, and one is non-adjusting events. All right, little technical, but I'll explain it in simple words. Adjusting events are those events who already existed on the balance sheet date. Means on 31st of December, this already existed. And after balance sheet date, means after 31st December, I got more information about it. But situation was already there. I got more information. For example, one of my debtor was hospitalized, and it was that he may not be able to pay. He was hospitalized, and I was doubtful if he will be able to pay because he's severely ill. And then after the balance sheet date, he died. So did I know that this amount may become bad debt? Did I know before the balance sheet that this amount may become bad debt? Yes, then it is an adjusting event. All right. And non-adjusting events, 31st December, there was no such clue. And on 1st of January, one heavy rainfall happened, all right, or thunderstorm happened, or fire happened, and something got destroyed. Now, on the balance sheet date, did I know about it? Did I have any clue about it? Answer is no. So these are non-adjusting events. Adjusting events are those that if I get more information, I am going to edit my balance sheet. I am going to edit my financial statement. All right. I'm going to edit means I'm going to go and write and adjust the financial statement. If bad debts has happened, after that, I'm going to edit this debtor balance on 31st, even though it happened after 31st. Non-adjusting, I'm not going to change anything in the financial statement. I'm not going to change anything in the financial statement. All right. So these are adjusting and non-adjusting events. Good, if you have understood. Now let's go next. So subsequent event can be adjusting, may not be adjusting event. When evidence or information about the subsequent event that require adjustment or disclosure comes to the accountant's attention. All right, it has come to my attention. I got to know something about it. I was not searching for it. It's not my job that I have submitted my report or I have done my review and then I keep searching for more information. No, it's not my job. But in case it comes to my attention, meaning is very different. It's not that I have to search for it, but in case it comes to my attention, then what? Then request the management to consider what? The impact of that event and appropriately reflect it in the financial statement. Anything that has happened, the debtor died, it came to my attention. I'm going to tell the management, why don't you change the debtor balance? Change the debtor balance. I think it's going to be good, right? I'm requesting. I'm not requesting. You can call it requesting. I'm advising the management. In case if not adequately accounted for, management says, no, I'm not going to change my debtor balance. It's going to be very difficult. My current ratio will become bad. So I'm not going to change my debtor balance. Okay, fine. In case if it is not adequately accounted for or disclosed in the notes, then the account should treat it as a departure from GAAP. The accountant should understand that the GAAP has not been followed properly. All right, that's all. Accountant should consider it as a departure from GAAP. Next one. Subsequently discovered facts that become known to the accountant before the report is released. Fine. So understand, it is not adequately accounted, it is not disclosed, then the accountant says, okay, fine, this is a departure from GAAP. Now I will tell you what I will do. I will tell you, I have got to know that it is a departure from GAAP, means GAAP has not been followed fully. Now that I know that GAAP has not been followed fully, then what? Then if he got to know before the report release date, report has not been released, it is still with me. Can I change the report that GAAP has not followed? Answer is yes, I can do that. I can do that because the report is not yet released. I have the report. So the accountant is not required to perform any review procedures regarding the financial statement. Something new has come up. I'm not supposed to do entire review once again fully. No. After the review report date. So ideally, review report date is done. Suppose 30th of March, review report is done. I have done. So I'm not supposed to look out for more information. No, I'm not hunting. However, if the subsequently discovered fact becomes known, I just got to know. Somebody was passing by, he said, you are doing review of that company's financial statement. This happened to that company. I was not searching, but I got to know. All right. So becomes known to the accountant after the report date, but before the report release date. Means I have dated the report this. Tomorrow I was sending this report to my client. I have not yet sent. I have dated, signed, everything is done. I was sending. Tomorrow I will dispatch. I did not send. So before release date, the accountant should discuss the matter with the management. All right. I should call the management. Look, I was about to send it, but this one I have got to know. Can we discuss about it? Discuss the management. Or if management is not giving me a good reply, then I will go to the governance. All right. Governance, the board of directors of the company. And determine whether financial statement needs revision. And I should talk to them and find out what is their opinion and determine in case financial statement needs to be revised. And find out how the management is willing to revise this, because I am responsible to issue a report. I am not responsible to, change the numbers in the financial statement on my own. I can't do that. I prepared the financial statement, I compiled, I reviewed, but did I write any number, sales on my own? No, I cannot do that. I can't correct it on my own also. I have to ask the management. It's their responsibility. You correct it. So I will tell the management, please correct it. Now, management can do one of the two things. Management will listen to me and make the changes, or management will say, oh, I am not listening. Poda, I'm not listening to you. One of the two things management will do. If they're listening to me, they are going to update the financial statement. And if they are going to update, understand the problem. I have done entire review of the financial statement. Then one small thing also came. Now, should I review entire thing once again? Answer is no. I have reviewed this. I have dated this. So I can only review this and date it once again. And this date is applicable to entire thing. And this date is applicable only to this thing, only to that small thing. So I can dual date my financial statement. Dual date my report rather. So dual date the review report, where one date is applicable to this and one date is applicable to only this subsequently discovered fact. Or I am not going to date this and this separately. I am going to date this one only. Only one date I am going to put. The moment I put one date, it means that I am responsible for everything, including this on this date, the later date. All right. So which means that I have not just reviewed this, I have reviewed everything between these two dates. So I am responsible, my responsibility increases here in one, or my responsibility increases in two. Which one am I more responsible, in one or two? So I am more responsible in one. All right, because I put one date and that date naturally will be later of the two dates. Right? So if I don't want to take much more responsibility, then I will do dual dating. Dual dating has nothing to do with double date. Here I'm talking about report. Focus here. If the management does not revise, if they don't revise, then what do I do? And the accountant believes that it had to be revised, but my management said, no, I'm not revising. Then what do I do? So the accountant should modify the review report. I will modify the report and I'll tell you are not following gap. This is not fine. This is not fine. This is not okay. I'm going to write whatever I want to write. If you don't correct your financial statement, if you don't change, I will write it in my report. Because anyways, I had not given my report. Right? Report is still with me. But what in case I had given you the report already? I had given you the report already. Report is with you now. And then somebody was passing by. Have you done a review of that company? I said, yeah. Have you issued the report? Yeah, just yesterday I sent the report. Yesterday I sent the report. So you already sent. You know what happened? The debtor, he died. So much money he is not going to get. Now what do? I have given the report. So I will immediately call the management. Can you please change it? Same request I will put. Can you please change it? And if the management says, nothing, report is with me, I'm not changing anything, then what will I do? So what I will try to do, I will try to find out who is going to be using this report. Was it going to a bank that he wanted this review report because he had to submit to the bank? Oh, I got to know. Yeah, he had to submit it. I will call the bank and say, don't trust this. I will call the bank and try my level best to inform the users as much as possible. All right. So I will try to do that. So usually an accountant has no obligation to make continuing inquiry, that after issuing the report also I'm making inquiry about the company. No, I have no other work. I have a lot more work. So many other clients to be served. So I don't have responsibility. But in case I become aware of material information, very important information, not some random information, very important information that existed as on the date of his or her report. Remember, not on the balance sheet, existed as on the date of his or her report, that would have affected the report and the persons currently relying on the report. The accountant should take appropriate action. Now, this is very big. What is appropriate action? So I told you one such example, that the accountant, if he gets to know this guy was going to the bank to give the report, accountant should call the bank and tell. If this person got to know he was submitting to the department, income tax department, call the income tax department and tell, please don't rely on this report. So appropriate action, whatever will be appropriate action, the company has to take. Comfortable? Accountant's action upon discovering and all that, disclose the new information, its impact on the impact on financial statement to the persons currently relying or likely to rely. So he should go and disclose to anybody who's relying on that report, which he has given, which he can't take back because it is already given, signed. So he should try to connect to that guy. The accountant should also discuss the management that, please, why are you giving that wrong report? You know, things had changed. I got to know about it. Now, please change the report. Please give me my old report. I will give you the new report. So he should go and discuss with the management. If the management does not give any option, then what? If the management revises, then my problem is solved. Then my problem, management is very humble. They said, oh yeah, is it? Okay, fine, not a problem. We'll revise the report. So management agreed to revise the report. Then in that case, no problem. I will again date the accountant report later date, more responsibility, or dual date, limited responsibility. But if the management does not agree to revise, then I will have to do at least go to some people and tell, please don't rely on this report. This guy is gone mad. If the accountant's conclusion on the revised report differs from the accountant's conclusion on the original, an emphasis of matter paragraph should be there. A description of the revision, the substantive reason for the revision, all that should be there. Very, very important. If my conclusion earlier, I should, everything is fine, there's nothing wrong, limited assurance I give, but in the later I said, no, nothing is fine. Nothing is fine. Then it says emphasis of matter paragraph should be there, because imagine person who has read this financial statement and saw everything is fine, then same person, because you change the report, same person is reading the financials, everything is not fine. Ayyo, which one to trust this guy? Why is this guy confusing? Should I trust A? Should I trust B? I'm confused now. So it says, no, issue an emphasis of matter paragraph. What is emphasis of matter paragraph? I will talk about it at length when we reach emphasis of matter paragraph. There's a paragraph where I emphasize on a particular aspect of my report for something really important. So I will emphasize, I will issue an emphasis of matter paragraph, a separate paragraph, where I will stress on certain important points to give you more information. About what? About why this report is modified. What are the reasons? Because you need to know that this was okay, this is not okay. Why? So I will give all the reasons why it is not okay, why I change the report, so that you are not confused, you are convinced that, okay, yeah, it looks like things had changed later. All right. So yes, to bring about an attention, to catch your attention. That's all in this SSARS engagements. All right. I hope you have understood. Can we do few questions, at least 5 questions to begin with? Yes? What do you say? Can we do 5 questions? Just, okay, let me take you through the entire screen. I've opened the Becker console. This is how the console will look like. I hope all of you are able to see the screen. Yes. An accountant compiles the unaudited financial statement that are not expected to be used by a third party. Let me not, because I've not gone into compilation at great length. So let me get into this core area. When an accountant performs more than one level of service, for example, a compilation or a review or a compilation and audit concerning financial statement of a non-issuer, the accountant generally should issue the report that is appropriate for I want answer from everyone. No sleeping. We have worked so hard. We have focused so much. We have to, we should be able to answer every question. All right. So highest level option A looks like the right answer. Very good. What standards are applicable for a compilation of a non-issuer? Compilation of a non-issuer. So it is option B, SSARS. Good. An accountant is required to comply with the provisions of Statement of Standards for Accounting and Review Services when compiling financial statement generated through the use of computer software. Drafting financial statement notes for the client. When should I follow? When I am compiling through a computer software, or when I am drafting financial statement notes for the client? So I am hearing A also, I am hearing C also. Okay, fine. So since A has got more, I have clicked on A. Okay, okay, it gave the right answer. Once you give the wrong answer, the next answer becomes a right answer. Compiling financial statement through the use of computer software and drafting financial statement. So, okay, none of you gave me right answer today. Okay, let's read. An accountant is required to comply with SSARS when he or she prepares, compiles, or reviews financial statement of a non-issuer. Compilation of financial statement requires compliance with SSARS. Drafting financial statement notes for the client does not constitute preparation. All right, does not constitute preparation. So if I am preparing the notes to the financial statement, it does not get covered under preparation service. Preparation is broadly about the income statement, the balance sheet, and that's it, or the statement of cash flow, and that's it. Notes and all does not get covered under preparation service. All right, so we don't have to go into SSARS when I'm talking about notes. But when I'm preparing the financial statement through a computer software, then is it applicable? Answer is yes, it is very much applicable. I'm sure some of you may be confused about automated softwares or bookkeeping. Yes, somewhere that point may be confusing. Good. Now little focus. Okay, a CPA is required to comply with the provisions of Statement of Standards for Accounting and Review Services when proposing, correcting journal entries, or preparing standard monthly journal entries. Standard monthly journal entries means, for example, every month you are paying wages, so pay wages entry. This is a standard entry that I have to pass every month. And correcting journal entries, 1 or 2 journal entries I need to correct. So in which one should it be applicable? How about C? How about C? Standard journal entries. If I'm passing standard journal, do you need my service? Every month you are paying salary, I'm passing entry for salary. This is a standard entry. There's no, you don't need any service, any unique thing. It's not being done. So the word important here is standard, and that's how questions become confusing sometimes. So it was proposing, correcting journal entry, 1 or 2 journal entries. I'm correcting standard monthly journal entries. There's no application of CPS mind, right? No, SRS is not applicable. Fine. So correcting journal entries, preparing standard monthly journal entries. Remember the word standard monthly journal entries. All right, let's go on to the next one. An accountant has compiled the financial statement of a non-issuer but declines to issue a compilation report. Now, declines to issue, no, you cannot decline to issue a compilation report. You have compiled the financial statement, you have to issue a compilation report. All right, otherwise, compilation is not done. All right, so you have to issue a compilation report. So let's see. An appropriate reporting decision? No. Appropriate. So is it a appropriate? It is an inappropriate. You have compiled, you have to issue a report, right? Fine. Are you guys able to understand? Yes, no. Are you able to remember something? Yes. Accountant is most likely to follow statement on standards for accounting and review service when the accountant has provided the client with financial statement format that does not include dollar amounts to be used by the client in preparing financial statement. Use the information in the general ledger to prepare financial statement outside of an accounting software. Type the client prepared financial statement without modification as an accommodation to the client. Propose correcting journal entries to be recorded by the client that change the client prepared financial statement. Now, these questions become confusing. They're so close to each other that, you find it so confusing that which one? So don't worry, slowly that clarity will come. Slowly that clarity will come. But whenever you are confused, don't feel disappointed that I don't know the right answer. At least eliminate two wrong options. 99% of the time, I can tell you, if you have understanding, conceptual understanding, you can certainly eliminate two wrong options. Try doing that. Okay, we don't know the right answer. Okay, fine. Eliminate two wrong options. Tell me the first wrong or the two wrong. Can I say option A is incorrect? Option A looks cleanly incorrect. So A and C are incorrect. Now do 50-50 between the two. You have to use these strategies. A and C looks incorrect. Now do 50-50. B is correct. And that's a correct answer. You got it? So slowly you have to go. Eliminate incorrect. Then settle down with two options. Now argue between those two options. Very likely that you will reach the right answer. Very likely. So, but be patient. Don't run out of patience. You are not writing exam immediately. Yes, you are increasing, improving your focus, improving your confidence. Okay. North Company, a privately held entity, asked its tax accountant King, a CPA in public practice, to prepare North's interim financial statement to be presented along with North Company's tax return. King should not prepare these statements to North unless, as a minimum, King complies with the provisions of. Now, this is very simple. This is very simple because you know which topic we are studying. I'm sure you know which topic we are studying. So you'll be like, ha ha ha, it is all A, it is all A, without reading. I know. So, statement on standards and review service establish standards and procedures for which of the following engagements? Reviewing interim data required to be filed with SEC. Remember, required to be filed with SEC. Preparing standard monthly journal entries. Now you should not do mistake. Standard monthly journal entries. Proposing adjustments in the book of a partnership firm. Compiling an individual's personal statements to be used to obtain a mortgage. All right. Which one? Come on. A. Why will you say A? Oh my gosh. Understand, remember A, I told you when I am doing a review of interim financial statement of a company for which SAS is applicable or PCAOB is applicable. PCAOB, no, if PCAOB is applicable, then SSARS will never come into picture. All right. So for which SAS is applicable. No, then SSARS do not. Then other provisions come into play. Okay. Let's go to a little more complicated question. Okay, let's go to this one. The authoritative body designed to promulgate standards concerning an accountant's association with unaudited financial statement of an entity that is not required to file statement with an agency regulating the issue of an issuance of an entity security is. Let me see who remembers that somebody. Financial Accounting Standards Board, General Accountability Office, Accounting and Review Services Committee, Auditing Standards Board. Exactly. So it is Accounting and Review Services Committee of the AICPA. Do you remember Accounting and Review Services Committee of the AICPA? If you remember, I had mentioned, I had also underlined. An accountant performs a compilation or review of the financial statement of a non-issuer, should exercise professional judgment in applying SSARS. Next one, never depart from SSARS, not depart from statements on auditing standard, be able to justify departures from SSARS. Now focus gives dividend. Good focus gives rich dividend. What about others? Come on. Yes, correct answer would be you can depart, but you should justify the departure from SSARS. All right, one more question. Okay, let me look at this question. May an accountant accept an engagement to compile or review the financial statement of a not-for-profit entity if the accountant is unfamiliar with the specialized industry accounting principles, but plans to obtain the required level of knowledge before compiling or reviewing the financial statement? Which one is the right answer? Why would the answer be B? Oh my gosh, why? No disappointment. I don't want disappointment. I can accept every opportunity. Lakshmi is coming. Have you ever said no to Lakshmi? Once? No, we are never going to say no. We'll let the Lakshmi come. And then we are going to open the book, open Saraswati. All right, and then do. One more question. Next, one more question. An accountant is reviewing the financial statement of a non-public entity in accordance with SSARS. The accountant most likely would perform which of the following procedure? So we have not covered review, but still, let me see in case without, I've given you a brief idea about review, but let me see in case you can answer this question. Actually, you're not supposed to answer. Okay, let me not test because I've not taught that. So there's no point. But tomorrow you should be able to answer. Okay, which of the following factors most likely would cause an accountant not to accept an engagement to compile the financial statement of a non-issuer? Not accept. I will not accept. I will not compile your financial statement. Which one do you think is the right answer? And the last question, I want last question to be correct. I want last question to be correct. At least most of you should give me correct answer, at least. Okay, let me give you one hint. One hint, I will not accept to be associated with you. I don't want to go shoulder to shoulder with you if I doubt your, what? I am not going to work with you or work for you if I doubt your integrity. Now think once again, which one could be a right answer? Think once again and tell me which one do you think is the right answer? If I know something has gone wrong and if I still do not investigate, am I trying to cover up something? Am I trying to cover up something? I know something has gone wrong. I'm still not willing to investigate. Am I not trying to cover up something? Answer is yes, I am trying to cover up something. And that is why indicate that the report of the asset misappropriation are not investigated by the management. I have a report that there is a misappropriation of assets. Assets are not small items. Assets are big items. These are assets. There is a misappropriation, but I'm not investigating because maybe I am also involved. Maybe I am also involved. I am not. So there is an integrity issue. I don't want to be associated with these kind of companies where I don't trust the management's integrity itself. I would not want to do work for you. All right. Like I said, integrity is the key to all relationship between the auditor, accountant, and the management. All right, guys. I hope you enjoyed the class, the session, and the class. All right. That's all I have for you today. Thank you so much for joining in. I'll see you again in the next class. Till then, keep working hard because that's the only option we have. Work hard and accomplish. Remember, every sweat, every moment, every sacrifices is very much worth it. You will surely see the benefits, the recognition, the awards in days and months and years to come. It's really worth it. Put in your best efforts and surely you'll enjoy the journey. Let's enjoy the process of becoming a CPA. And that's important. We cannot suffer today in a hope that tomorrow would be a bright sunny day. Why not enjoy today the journey for a bright sunny day tomorrow? I want all of you to follow this process of having fun in the journey and not just wait for the destination to arrive. I'll see you very soon in the next class. Till then, bye-bye, good night, and take care. Thank you.